Despite the recent bull run, U.S. stocks are slightly wavering today as markets shifted their focus to that high-stakes meeting in Washington, where, as you heard, the U.S. president and NATO allies have been talking with the Ukrainian leader. Let's start there with Kai Lam, Chief Investment Officer at JCIC Asset Management. Thanks for coming in today.
Thank you very much.
So usually this time of the year, August, September, it's quiet. Maybe there's a bit of volatility, but generally sort of not a big time of big earnings, or we don't listen as much as we do the rest of the year. Do you think the bull run's going to carry on for the fall? I
think that the markets perform really well, and valuations are a bit more elevated in the U.S., but it's not broad-based. It's more, Mag 7 type names. And then when we look at the other markets, both Canada and in Europe, the valuations are not as elevated. I don't consider them expensive. That said, we've had a good run, so maybe we'll see a pause, but I think we'll see more of a rotation within different sectors.
Yeah, I'm hearing that a lot. People are saying finally people are going to maybe leave tech where it is and filter down to some of the smaller caps, which have been ignored largely for the year. Do you agree?
I think as long as those large caps deliver on the earnings growth, and they'll still perform well. But I think within different sectors, some are more expensive than others. So for example, in Canada, the communication services has been really weak for the last 3 years, but we think that area can do better given that we're seeing some bottom for a pricing environment in the mobile space.
Got it. Okay, let's talk about the Jackson Hole Symposium, which is happening this week. People are trying to figure out what kind of tone they will take there, and Federal Reserve Chair Jerome Powell, what we will hear from him. Numbers have been changing, right? We had the revised economic numbers in the U.S. for employment. You've seen where inflation is, with core inflation higher than expected. What do you expect to hear from Jerome Powell in terms of his tone?
Look, I think he's going to say what he always says the last few times, that it's really data dependent. I think we're looking for maybe a rate cut potentially in September, but if not, there should be one before the end of the year anyway. But that said, when we look at growth forecasts for the U.S., they're lower than they were before the concern over the trade war, but they haven't been as bad as originally expected. So we've been seeing an improvement on the growth expectations there.
He's been talking about, as you mentioned, waiting for the data. We're beginning to see the data that has changed, right? You think he's still going to be in a wait-and-see position ahead of September, and we won't really know what he truly thinks until we get there?
Yeah, I do. I mean, we haven't really seen the data to be that bad yet. We haven't really seen the big impact from tariffs, and then we've also seen tariff deals. So I think it'll continue that trend.
Let's talk about a couple of specific stocks. You like Cameco, but you really sold some of that.
Yeah.
Many people are hanging on to it. They think there's going to be so much more growth there with uranium and smaller nuclear reactors. Why did you decide to trim?
So Cameco, we've done really well with it, but it's doubled since April. And in that time period, you've had positive news flow because the uranium price has gone up. They've raised their guidance, helped by new contracts at their 49% interest in Westinghouse. But now it's gotten to almost 2 times its net asset value. It's gotten kind of rich. And so we just see better opportunities elsewhere because we keep a concentrated portfolio. And so we look for the best opportunities.
Okay, you mentioned, or you touched on the fact that, valuations are high for some of those tech companies as well. Are you trimming in other places?
Yeah, we're always looking for the best value. And so when things do get expensive, we'll trim. But for example, on the U.S. tech side, we haven't trimmed at this point.
Okay. I know you also have a positive outlook for a German arms manufacturer. I'm wondering if there is a decision to have a ceasefire in Ukraine, or there is a peace agreement in that conflict. Would that change your opinion of some of the defense stocks you were looking at?
Yeah, so we play European defense through Rheinmetall, and it's done well for us for the last couple of years. And they are a provider of ammunition as well as like armored vehicles. We think that the group has done really well this year and that it would pull back on a peace deal, but ultimately it'll be a buying opportunity because with the increased spending targets from 2% to 3.5% for direct defense from NATO and another 1.5% for security infrastructure, the growth will play over the next decade. And so we think the group will still do well.
So is it mostly centered on NATO putting out sort of different amounts that they want its members to achieve?
Well, I mean, with Rheinmetall in specifically, because part of their business is ammunition, and NATO basically doesn't have any stockpiles, it'll take a decade to replenish. And so we think that that provides a lot of visibility that we like.
Okay, you also like CGI Group. Tell me about CGI and why you like them.
As we sold Cameco, we bought CGI. CGI, very recent buy, it's been beat up. It hasn't performed well. There's been a couple big issues. One, the market's been concerned about the 14% of revenues that come from U.S. federal government because people are concerned about the impact of DOGE. We think that is overblown and that business is not really at risk. The other concern has been just the tariff uncertainty has delayed spending from some different companies. We don't see that as permanent. And so it is a high quality company that we like, and you're able to buy it now, at low valuations.
Taiwan Semiconductor, a lot happening in that space because you have Donald Trump wanting to tariff semiconductors, and he's talking about escalating the tariffs within a year. We know that everybody wants semiconductors right now, but do you see some of the demand fading depending on what the tariff situation is in Washington?
No, I mean, with Taiwan Semiconductor in particular, because they make more than 60% of all the semiconductors in the world, and they have a near monopoly on the most advanced chips. And we think that, AI is going to play out for quite a long time. I understand that, Trump has concerns or wants to tariff semiconductors, but he also articulated that, if you're investing in the U.S., that you can get relief from that, and they are certainly, investing a lot of money into the U.S. plant as well.
Do they already have manufacturing in the U.S.? I've known they've made an announcement to build, but do they already have a footprint there?
Nothing in a material way, but that'll change.
Okay, well, drag their feet out for 4 years and see what happens after that, I guess, with Donald Trump and off. And Kai Lam, Chief Investment Officer, JCIC Asset Management. Thanks for your time.